Hey everybody, welcome back. Well, I see some developments here, so this is going to be a pretty impromptu, unedited video where we're going to focus a lot on the technicals and we're not going to really pay attention to too much macro. We're going to work in FOMC, but I had a different plan for tonight's video. But after what I saw today, I think it's important that I could add the most value this way. So let's start here. The 55, you're holding the 55. We're going to go through a lot of little indicators here that I'm going to suggest that you start looking at. And then you see the NQ. And then we have the inability on the NQ to rally. Now, the first thing that you're going to notice about the NQ versus everything else that's out there. You see this doji? The very first thing that you should be doing is measuring that doji. And what I mean by that is you drop a line here and you measure the 50% line. Now, by dropping a 50% line, you're going to be able to tell real quick here who is in charge today, buyers or sellers. If you're above the 50%, buyers are in charge. If you're below that, sellers are in charge. If you go to the ES and you take a look here and you do the same exact thing and you drop your line there, buyers in charge or sellers are in charge, and you drop it and you're right there, but it's not as bad. Go to RTY. I don't have a doji, so I don't really care. I just got to the top of the flag. I rejected the flag. What I do like about this, see the high right here? See how you didn't take out that high? It's not that they took you over and then took you down. I want to say that again because that's going to come up again here really soon. They didn't take you over and then take you back down. That's a very big distinction over what you're saying, and I'll show you what I mean by that. So let's go take a look at the NQ for a second here, and let's dive into this on a 1-minute chart. And you're going to see some big demarcation lines here, particularly around 11:30. You're going to see a big one. And we all know why this happened at 11:30, and if you don't, welcome. This happened at 11:30 because of the bond auction. If you're not watching the bond auctions right now at 11:30, I don't know what you're doing with yourself. But these are when you're seeing lows or highs in the market. It is very distinctive, and you cannot miss them. I can't get any clearer that you need to be watching these levels, and you can see that. What was most troubling about this was the fact that there was zero follow through, and you would look at this and say, well, what do you mean? All you did here was work that off and get back to this level. Now, here's the problem. See right here, you had wick, and then they got you over, broke it down, and then they pushed you through like it was gonna go. Again, what did they do here? Higher high. This is my problem, and this is very distinctive, and you need to pay attention to it. See how you're sitting right here? See how you got over, and then they cracked you again? See how they got over and you got cracked again? I want you to look at your portfolio today and tell me how many times you bought a breakout, how many times it failed. You're going to see this over and over again. When you see them doing this over and over again, they are not looking for supply. They are, see how you're under here, it would look like you're looking for supply. They are looking for what? Demand. They are always either looking for supply and demand. You're going to say who? We're going to call them the man, but really what we're talking about is institutions. So if you go here and you take a look at RTY, and stay with me, and you might want to watch parts of this a couple times because I'm doing it super informal and unedited, but I think it's really important that you get this because from what I'm seeing, I see a lot of games out there ahead of the FOMC, and we're all kind of expecting the FOMC to be mildly positive when it's behind us. But if we look at these levels, and we can see this is marking off the 10, right? 10:30, you drop down 10:30, it rallies. What happens at 11:30? Someone said the words bond auction. I don't care that you undercut today. I could care less because you know what I don't have? I don't have shenanigans. I have this level, we tried to get over that level, we failed at that level, and that's it. I don't mind when the market does what the market's supposed to do. Okay, failed breakout, no problem. But when they do that stuff over and over again, it means they are looking for demand because they have so much supply, they're trying to get out of it. You might think that that's not the case, and that's fine, but I will give you examples that you can see very clearly of them doing just that today. So, and it doesn't matter the name, you're going to see this especially on the big dogs. But if you mark the high here, you try to get over. What's the first thing they did? Rejected you. Tried again, rejected you. That's okay. That's not a big deal at all, right? Because that's normal. You get to a point of resistance and you reject, tries again, reject, right? Matumbo 3 times. Then they push through. They give you the confirm and everything. Then they rip it down, can't hold it. And what do they do here? They take out the lower low. So clearly you're going to think what? Oh, it's definitely going to crack. What are you going to do here, right? You're either going to short here, right? I mean, that's usually what you do, or you're going to get stopped out eventually and say, we just took out the lower low. I need to get out of it. Maybe you're looking at like a 15-minute chart or something like that, and they're going to come here and they're going to whack you. And that's going to be the end of it because you bought this flag because you said this time it's really going to go. And I'm going to use the 1 minute because that's how prevalent it is. But watch what they do again here. Over, doesn't go. They take it over, they get everybody in, and then what happens? Complete rejection. Maybe it's going to come back, and then you're rejected. And where are you? The low of the day. All they did today was go and try to find demand to lure in because they had that much supply. And it doesn't matter. Look at Microsoft, for example. Look at the name on Microsoft and look how little. Look at the name. Look at Microsoft, and it doesn't matter. The name is what I meant, but it doesn't matter. They're all not going to have the same exact pattern, but over, oh, I should buy the breakout. It failed. Oh, I'll buy this breakout. Okay, well, maybe it's going to come back. No, it's not. And you're seeing this over and over again. Dumping off the open usually is retail. I think it was pretty clear today at the end of the day who it was. That is very obviously, that looks like institutions taking advantage of retail getting giddy. Retail gets giddy off the open. Institution said, here you are. Do you want some more? And then just kept spoon feeding us all day. And that's exactly what they did. If you take a look at NVIDIA, same exact pattern, couldn't be any clearer. I mean, it really couldn't. They're taking us up, and then they took us right back to that same level. You'll remember this level from before, and you can see that level right here. This is why I always mark off control bars. And you can see how we were unable to get over that over and over again. There's your reversal pattern. And all of a sudden, the hourly's up. You do the undercut, looks like a gap fill, and now you're closing out lows of the day. You need to hold here, by the way, because if you don't hold here on this, that's a long way down. Because if you crack here, you have the gap fill. After the gap fill, you have the next gap fill. Gets you back to 106 pretty quickly. And you have some semis tonight that aren't that great. We're going to get over that. And if you crack there, we're looking here. Next up is AMD. Now, if you look at AMD today, AMD didn't even have a chance to even think about doing what I'm discussing, but they did it a couple times. I actually saw AMD today and thought that there was a decent day trade on it. I made a little money, very little money there, very little. But on the way up, and then I saw the fade, and I'm like, okay, well, they're done. But you couldn't rally. You could not rally. Now, this is not one of the big dogs, and it doesn't move with the entire index like the others, so you're going to get a different pattern. But you will note the same kind of pattern here. You will note the higher high, and then the failure. The higher high, and then the failure. When you start to see this kind of stuff, you want to pay attention to it because it's telling you what they're doing. They are looking for demand because if they have demand, they can sell it to you. Most people are going to look at RTY and say, oh, that's next to fall. It very well could be. Remember, the leaders fall last. They say when the generals fall last, that's just the way it is. RTY is now the leader. My issue with RTY and what should concern people in particular is the disparity in interest rate moves. And I'll show you what I mean by this. Here's KRE, and KRE over and then down. And I don't like these kinds of moves when that happens. I'm just going to be blunt, even though I like regionals here. I don't like over and then done. I'd rather you just fall down, because it's just so sneaky to pop us over and then fall down. It just feels bad. So anyway, I don't like it. But if you go here and take a look at the home builders closed at a new high. Go take a look at NIL at the end of today. 3X ETF, look what it's doing. That's what I thought all of them were gonna do today. And it's not what they did. DPST popped over and then reversed and sold down by the end of the day. But you're seeing that across the board with these names. All right, so they're getting a little tired and maybe they're ready for a rest, or maybe they're not gonna do anything to FOMC, which we should bring up FOMC. But what we're seeing very clearly, if we start getting into this, is that these higher highs are being met by selling. And it's not a little bit of selling. It's pretty massive selling because they took advantage of us off the open and they popped them all over these higher highs. And then they spent the day meticulously selling. Now, how do you know that? Because when you look at these kinds of charts, you can see real clear what they were doing. They let it rally. You came down to the gap fill. Where did we gap fill? Right here. Where was the low? The bond market. What'd they do? Took it back up, and then they couldn't lift the whole sector. And these are always like telltale signs where you can lift the stock, but you see how the same time I'm talking about those higher highs, see how come the sector can't do it? Because there's too many names. It's harder for a sector that has a lot of names associated with it. XLC is trying to hold in there, trying. And this has some other names in there that are a little differentiating, like such a thing as like Charter. Charter had earnings, they were decent, but has Charter really gone anywhere besides the first 10 minutes of when it came out with earnings? No, it has not. These are the kinds of signs you have to look at. Now, I'm going to go through a bunch of internals and I want to show you things because where I'm going with this is I'm not saying that we're never coming back, but I'm saying you need to have your antenna up and you need to probably have it up a little bit more than you thought you did. I certainly have my antenna up more than I thought I needed to from Saturday, and it's why I wanted to do the video this way. It's impromptu. If you like it, please comment on it, but I think it's really pertinent to go over this. Let's start here. So McDonald's comes out with earnings and they miss. McDonald's misses its comp sales for the first time. Now, missing their comp sales for the first time, what's important about this? They haven't done it since the pandemic. Now, if we go out there and take a look at names like Mercedes said that their comps and gross margins were down. Ford is down and Ford blew up. That is the single greatest move Ford has had since when? the pandemic. This is really important to get, guys. Even Tesla, as much as people love the name and whether it goes up or down, whatever, one of their issues was margins. Is it possible that it's not just a Tesla problem, that it's a car company and it's a consumer problem? And it's starting to look like that might be the case. So that's something else that we have to talk about, but we're going to talk about that in another video. I do think that that's interesting. A lot of people are trying to figure out why it's up. I'm not saying whether it should or should not be up. Tesla's going to do Tesla stuff. But I do think that the margin issue is more predicated across a broad spectrum of things versus just on them. This is why you're seeing names like ELF and these other names. They're all starting to roll. They're starting to implode a little bit. And we saw this also at Louis Vuitton. We saw this. They all came out and said margins are off. We even saw Hermes. They came out and said things are good, but margins are off. And this caused also to see us with names like Ferrari drop, even though they haven't reported yet. So we're seeing some signs of that. We have STLA that came out and said we have major margin issues, and people don't even know what this is because it actually trades on the Netherlands. But just think of all those brand names that you see, but you don't know who owns. Think Alfa Romeo, think Maserati, those kinds of names. Margin issues. And this is what we're seeing over and over again. Now, I thought McDonald's would drop on this, but McDonald's is up because they make a meal that costs $5 and people are buying that meal more so than they've ever bought it, apparently, according to them. So what that's doing is that's driving it up. It's not a really great economy if the area that's going up right now is the $5 meal at McDonald's. The other thing we need to watch right now, guys, is sentiment. And what do I mean by sentiment? CK Technologies exceeded earnings, crushed 38%, up dramatically. Raises guidance. What's it doing? It's taking out lower lows. Okay. Western Digital coming out with earnings, same space. They can't get out of it fast enough. They cannot get out of the name fast enough. And I think that this is really important to watch. There's very small pockets out there that are holding. I'm going to show you another one. This is KLAC. They do semiconductor capital equipment. And the funny thing about them is they beat and exceeded, and it's just an all-out beat. 7%. Now, on top of that 7%, they raised and exceeded estimates across the board. And the stock was up about $30 today and finished at the low of the day. This is just get me out. And what they're doing is they're being methodical. Now, this is how you know they're being methodical. You're going to want to just pay attention to this. And I'm going to show you how to do this one calculation in a second. This is the VIX. And if we look at the VIX, we can see that the VIX is going sideways. So everything should be fine, right? Okay. This is the VIX 100 on the NASDAQ 100, VXN. What you're going to see here is that we didn't even move. And the one thing that has been bothering me is that we made a higher high here, whereas if we split this screen and we just take a look at this here and go VIX, we will note that we did not make a higher high here, but we did here, which means the VIX here, VXN, with the NASDAQ 100 is more at risk than the VIX is, which means what? Technology is more at risk. Well, thank you, Captain Obvious, but there it is. And I would pay really close attention to both of these. But there's something else to pay attention to. Now, if you're in the community, you are aware of this already, but this is pretty much what I will refer to as an institutional level tool, and you can create it yourself. And I'm going to show you how to create it yourself right now. See the VIX, the 3-month VIX? You take the 3-month VIX, which is on TradingView, VIX 3 months, and then you divide it by the VIX. What this is going to tell you is how fast the VIX on the 1 month is moving versus the VIX on the 3 month. When it's out of whack, what you will see is an extreme move and an extreme level to pay attention to. My issue right now with this is it looked like it was going to come down to levels that we saw before. Now, I'll show you those levels, and you can see right here that this is where we were April 19th. Now, you're going to want to remember that. Where you are right now in November is you are right around this same area. My issue with this is that the VIX 3M went up divided by this today. In other words, nobody was panicked with what happened today. It was just complete complacency. Now, if you go back to here, you won't see that complacency. So in other words, if I look here to here to here, now you take this, and I'll show you where I'm going with this. So now you take this and you overlay it with this, with the VIX. And what do you have here at this particular spot? And I'll move it over so you can see it. And you're gonna have to deal with the unediting because I'm just not gonna have the time, but I wanted to get this out. So, okay, so I have a VIX at 21 there that gave me that reading, okay? I have a VIX here of 21 that gave me that reading. I'm at a 16. So what are the chances, even here, what are the chances that that's really the bottom and that I don't have to have some kind of cathartic move to the downside? That's really what's bothering me. If we go and take a look even here when we got up to that 28 in March 23, when we thought we were going to lose every regional bank in the world, look at where we were. We got to that trough level. So I would be watching this, but what is bothering me about this is how lackadaisical we're being about this. And I'll show you another way to see how lackadaisical we're being about this. In front of you is PCSP, and anybody can go and look at this themselves. Let me clean this off. Okay, well, that drawing tool is not going to work, so we're going to use this one for time's sake. Now, if you go back and you look at November 1st, look at the put-call ratio on that date. You were at a 163. Now, it doesn't even need to be before it or after it. I'd like it before it, really. But look at end of March, right before April 19th, right in here. And even April 18th, 19th, you were right here. You're right at a 148. Okay? And that is the put-call ratio. That's what it is. Puts to calls, puts divided by calls gives you a ratio. All right? No one cares. Like, I hate to say it like that, but no one's panicked. No one feels the need to protect themselves. No one's buying puts. And this kind of lackadaisical tells you that there's usually more to go. It usually tells you there's more to go. And you're starting to see that with the action today over the higher highs and how they took us over those higher highs. And that's a really important concept to get, guys. And again, I'm going through some very specific content here, and I know it might be a little in depth, but I would watch parts of this a couple times. I try to keep this as simple as possible sometimes, but today there's just some things out here I really want to point at. I'm going to go to this S&P watch list. I'll show you a couple things. I have this chart that I call it 4, and I look at these 4, but if we look at the stocks above the 50-day moving average, you're still at a 70. For us to really drop down and come down to these levels, okay, the last time that we found the bottom in April, we were at a 25 reading. Okay? November's bottom, we were here at an 8 reading. We're at a 69. Okay, so does this have to drop? No, but when we're trying to figure out, are we getting to a point where they're done selling? And I'm not talking about the fundamentals. I'm not talking about what could happen with the FOMC or any of that. I'm just saying we felt really heavy today and we saw a lot of shenanigans out there that made it very difficult for traders. And I know that people saw this. And if you look at these levels, you can already see that you're having these levels and you're struggling at those levels. Here's the 5-day. And the thing about the 5-day is the 5-day needs to be at a trough level in order for us to find that bottom. Here you are on the 19th. You're at a 4. Here you are right before November. You're at a 6. Here we are at a 70. All right, so these are all telling us, if we just go through them, this is the 20-day. These are all telling us, here we are at a 7%, and that's percentage. And then here you are here at a 16 after coming off of a 7. See, if you had something before this where you got washed out, tried the rally, and then retest, you have something. But we don't have anything. We just tried to take out highs. Now, can the market still push? Yes, anything can happen. But then you come here and look at the stocks above the 200-day moving average. At least here, we had some dips. Like here on the 18th, you dipped to 66. Here you were completely washed out at 25. But 73 is not washed out. That's at a peak valuation. So when we're looking at things like this, what we're seeing very clearly, and we can go here as well, the put-call equity ratio of just equities in and of themselves, we're not seeing signs of any kind of capitulation. A matter of fact, if you go and mark this stuff, like we'll just go here and mark November 1st, you can see that at roughly, what was that? 108, okay? And then you come here on April, and even if we use like the day before April, it's fine. But if you went here and said, all right, you're at a 100, okay, where are we right now? You can't look at post because of the drawings. You're at a 0.69, okay? And that's right now, okay? So you're nowhere near oversold and you're nowhere near have enough fear in the market. The most important index for us to really watch is that VIX3 divided by the VIX. But I think it's really important for me to get this out there instead of what I had previously, and that's why I changed it. And I just want to preface this with a couple things. After hours, what we're seeing some pretty much just absolute washout here, where some of these semiconductor companies are missing. So we have Lattice that's missing tonight, and we have RMBS that's missing tonight. You do have some bright spots. You know, it's not all doom and gloom. Fiserv's up, which is nice. And then you have, this is really nice, the fact that Sprouts, that you actually have a company that actually raised numbers and everything else and had solid gross margin. So that is nice. So you are seeing some signs, but when you look at this going into it, and then tomorrow night, you look at what we have lined up. You have AMD, you have Microsoft, you have a net. You have some big dogs coming out tomorrow night, and they better deliver, or I think we're just going to see a little more pain. That's it.